Hello and welcome. You're watching the Small and Mid-Cap Show. I'm Hersh Sayta. With regard to where markets are, of course, 0.5% lower on the Nifty, but, we're going to quickly focus on some key names in focus today. And the first one we're going to talk about is Keystone Realtors. The company recently posted third quarter earnings where the profits saw a multi-fold rise and margins were down when I'm looking at it year over year. We have with us Boman, Rustom, Irani on a day, of course, when we also had the RBI monetary policy statement coming out from the RBI governor. Let me first start off with that question. We haven't really seen as of now with regard to the stance itself any major change. Boman, talk to us about what you believe from the statement life will look like going forward, especially with regard to interest rates, because real estate is such an interest rate sensitive sector.
That is so true, Hiral. Thank you very much for having me on your show. Real estate, they say in real estate, it's not the price of the transaction, but the way it is funded that is critical. And this is absolutely right, no matter which part of the country you go to. And whether you're buying an affordable home or you're buying a uber premium home, you're generally affected more on the affordable home side when you're talking about the interest rates. Actually, while I'm still okay with the fact that they've not changed the repo rate, obviously I would have liked for it to be tweaked down a little lower. Having said that, I think all the signs are very good. The consumer price index, which is about 5.4 for this financial year, stands to go down to about 4.5 in the next financial year. We also have the RBI pegging the GDP real growth at about 7.7% for financial year 25. And we have the repo rate, which is unchanged as of right now, which means that it's going to be great for the home loans, which directly, as you mentioned, affects the entire housing sector and purchasing power of my consumers.
Sure, understand, Boman. Quickly with regard to, where you see your numbers and how do they really start to add up. Your GDV, or rather gross development value, which is your your new developments that have come on stream, 9-month FY24 stands at roughly 2,200 crore. You still have 2 projects in the pipeline to be launched by end of this year. What would the rough GDV for that be like, and what would the execution timeline for that be like?
So, Hiral, actually, our business development teams have been very active. And on the redevelopment front, where, Rustomjee, Keystone Realtors is considered as one of the developers that has consistently performed, is going extremely strong. It's always good to be the developer of choice when a society is going in for a redevelopment, because they believe, or they strongly believe, in our ability to complete a project in the timelines with the amenities and all the promises made to them for the period. I'm happy to state that, as a matter of fact, the last 9 months of this year, we've done approximately 5,100 crores worth of GDV projects that we have bagged. And this is a little more. I mean, if you consider the 2 projects that we've tied up in this month, we've more than doubled our GDV of last year. That was about 3,425 crores that we had acquired. And again, keeping in mind with our guidance, we have said that we'll continue to grow in the mid-mass, which is the 1 to 3 crore segment, and in the aspiration, which is the 3 to 7 crore rupee segment. And if you see all the news that is out there, our maximum purchases or our maximum tie-ups have taken place where we can provide our consumers homes in this price point. We continue to be extremely bullish on the western coast and the western railway line of Mumbai, and we believe that that is going to be the side that really continues driving growth. At the same point of time, our Thane continues to be a very sought-after project, it being a township of 127 acres. We've done extremely well with the 3 launches that we've had this year over there. So overall, I think the year will be very much as per our guidance, and we hope to cross those numbers as well. But a 25% growth that was given as a guidance will definitely be clocked. Or rather, we might even, be kind of clocking over that as well in this year itself.
Sure, Boman, point taken. Just quick clarification, you're speaking with Hersh Sayta, so just that one piece. But also, if I can, sure, no worries there. But if I can quickly try and understand with regard to your, pre-sale numbers, Q3 FY24, 616 crore. Now with these two new launches for the, for this Q4 of FY24, pre-sale number would be a slightly larger number in this quarter?
Yes, they would be larger in this quarter. As a matter of fact, as we all know that the Q4 always stands to be one of the best quarters in the year, because a lot of people are, while we are done with Diwali and Dasara and the season, which is the Q3, but the Q4 also, there's a lot of buying interest that takes place. As a matter of fact, we participated in one exhibition and the response was extremely great. And now we're participating in another exhibition. Again, these are projects that are localized to that particular area, but the CREDAI and CHI exhibition has been extremely good for us. And we've clocked more than the regular number of apartments that one would expect out of there on the spot bookings as well. We are very, very hopeful that, the 616 number that we've had, which is about 101% over the quarter two and about a 42% year-on-year growth over the quarter three last year, will be excelled in the quarter four as well, and we'll well cross the 25% guidelines that have been offered, Harsh.
Sure. Boman, what about debt? You've guided for 1:1. Currently, your debt is still coming off. My guess is as some of these pre-sale numbers start to stack up, your debt has more scope for coming down before it goes back up, or how should one look at debt?
No, Harsh. Basically, at Keystone, we've kind of decided, or we've given a guidance that our debt to equity would be 1:1. As of right now, we are at about 0.5. And this 0.5 also that we've gone up in our debt, our gross debt is roughly around 889 crores, whereas the net debt is about 458 crores. The reason why this debt has gone up is because we did an opportunistic purchase for a project that has been very much in our development itself. There was an opportunistic buyout of the developer, and that is where we've kind of raised our debt to take that over. I think it's a strategic move that we've taken, and this will pay us heavy dividends in time to come.
Sure, understood. You are still seeing from an overall demand perspective, Boman, demand sustain, hold up, at least from your commentary, that's the sense I'm getting. So plenty of positives, right, for the real estate sector, given that you're at the top end of the interest rate cycle and demand has continued to sustain in some of the largest markets. You cater only to Bombay largely, and it's high ticket.
Harsh, I'm happy to state it's not only my experience, but across the board, any developer will tell you that real estate or other good developers who are selling homes where they are not only looking at price points, but are looking at volume and velocity and are in a position to offer the consumers what they need, are seeing tremendous growth taking place. I also want to state that time and again, CREDAI carries out various reports, and we carry out reports with as much as, which are the cities that are going to grow in the future. And there are 9 cities that are definitely, on a growth path. And we're talking of 60% urbanization of the Indian population by 2030. These are not my figures, these are the Government of India figures. And add to that the MMR, which has performed phenomenally well, with being 42% of the entire residential recognized residential real estate by value in the last year, should point out very clearly to a great growth. And I am very happy to state that the infrastructure growth that has taken place in the city of Mumbai will actually add to Mumbai and the MMR tremendously. And we at Keystone are always following wherever the infrastructure grows. We are in alignment with the government's vision of providing homes across various categories. And we are present, Harsh, in all types of development, everything from affordable, which is the under 50 lakhs. In the mid-mass, we are holding a very large amount of supply that is going to come out. And this is one of the strongest segments. That is the 1 to 3 crore apartments for Mumbai city. Then we've got aspirational, which is the 5 to 7, which is everything from Andheri West to Bandra East. And you're aware of the kind of developments that we are doing out here. We are tying up newer and newer developments in this area as well. And finally, in the premium and uber premium, there's a very strong buy. People are actually making investments in real estate. And we are one of those that continue to be supplying or rather taking care of the needs of our consumers. And we are beneficiaries of the same.
Got it. Okay, so that winds my conversation with you for today. Thank you so much for all of that perspective, Boman, and
Thanks, Harsh.
yes, and from the viewers as well. Thank you for all of that. But we'll slip into a very short break. More on the other side. We'll also speak with the management of Nexus Select Trust. Also, something happening in markets. We'll talk about all of that and more. Welcome back. You're watching the small and mid-cap show here on NDTV Profit. I want to quickly flag off markets. We've seen a bit of a slip up, 200 plus points in fact, from the top for the day. And that's where we're at post this RBI MPC address by the RBI governor. I want to also quickly flag off the contributories on the Nifty 50, and what you'll see is only 7 positive contributors, at least the way I'm looking at it right now, only 7 positive. The top negative is HDFC, ICICI, so the 2 largest private sector banks are leading the fall with regard to where the Nifty 50 benchmark is concerned. Axis is the 4th largest in terms of points decline, or 3rd largest now as we speak. So a lot of pressure coming in from there, but you look at SBI, it's playing the offset. And if I can also lastly have the advanced decline very quickly to try and see how stocks have moved. And the advanced decline ratio will also seem to suggest, see, that very sharp reversal being seen in advances versus declines. But we have with us Ajay Bagga. He is, of course, a market expert. Ajay, it's firstly a pleasure having you on the small and mid-cap show on NDTV Profit.
Thank you. Thank you very much.
Ajay, so, I want to quickly try and understand from you your take with regard to the policy itself. We're seeing largely all sectors in the decline except the Nifty PSU Bank. How are you viewing this development, and how are you viewing the commentary? Because nothing really surprising came out from the commentary, but markets not reacting positively at all.
Yeah, I think two surprises you can say. The policy was hawkish. So one was expecting that for the sixth policy in a row, when you're not raising rates, it should have become more dovish. But the commentary was quite hawkish. On balance, the inflation issues remain, though inflation is trending downwards. I think the two major points which kind of spooked the markets, one is the fact statement on loans. You know, if you are taking loans, there are a lot of hidden charges like processing fees, documentation fees, like advanced EMIs, which are taken especially on consumer durable loans, things like that. So bringing all that into one interest rate might hurt margins. The second hawkish part was that the liquidity issue was not addressed. So the governor did describe it, and overall systemic liquidity might be okay because the government has not been spending. But come March 15th, when the money goes out of the system for advance tax, you will have an issue in the busy season going in with a liquidity deficit. And the bond yields immediately factored that in, and they started showing that the market was not very happy with the liquidity measures or the lack thereof. So I think these were the two big issues, overall hawkish tone, and nothing for the market to price any up move further. And the markets were priced to perfection, so natural some amount of sell-off has come. It will get absorbed.
Sure, some great takeaways there, Ajay, from you. I want to also try and understand from you your view on the Nifty PSUs, or rather just the PSU pack, which has been on a tear. And just try and understand what your sense is with, or what's your analysis or thesis with regard to the kind of returns that some of these stocks have given. Of course, maybe SBI, CanBank, maybe exceptions, but outside of that, also if you have a viewpoint, that will be great to understand.
Yeah, you know, on the mid-tier and the smaller PSU banks, I have two words: watch out. Because and look at the price to book. There is very little free float left in a lot of the mid-sized banks because the government kept capitalizing them over the last 5 years, and so most of the stock is lying with the government, which doesn't sell on a daily basis. It will announce an OFS or a fundraise and then do it. So on very limited floating stock, we are seeing very high price appreciations. In some cases, even 50% hikes in 2 weeks is what we have seen in some of the smaller PSU banks. Price to book going to 6 times, which is like, you know, the best run NBFCs growing at 30% would also pant and sweat to get valuations like that. So overall, fundamentally, there is a re-rating. Overall, fundamentally, 10 years, 12 years of underperformance has got repriced. Overall, fundamentally, the PSU bank pack, first 3 quarters of this financial, the profit after tax has gone up from 70,000 crores to 98,000 crores. So great show. But the pricing has run ahead of the fundamentals, and that does not end well because of the lack of free float. A lot of, I think, engineered price hikes are also happening. So I would be cautious. The big banks, very good. It's a turnaround story. It's not over. By all means, we can look at them. But the smaller banks, be careful whether, the engineered price has taken over rather than the fundamentals.
Sure, Ajay. Ajay, I'm going to stick one quick question with you. Maybe if I can have it that in maybe 10 to 15 seconds. What sectors are you looking at?
I think IT pharma is what you should look at. If you are playing for a global recovery, a global soft landing and a global recovery, global rate cuts in the second half of this year, I think IT pharma would remain the top sectors.
IT pharma it is. Thank you so much. It's a pleasure having you here, Ajay. And of course, we'll be in touch to obviously dissect your views in greater detail. But that's all we have for today's show for now. The markets have held up that slip. They've not slipped further, which is possibly a positive. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. Thanks so much for watching from myself and everyone who puts the show together.